What's up, everyone? Good afternoon and welcome back again. Thank you for joining us. As always, if you have any questions, feel free to just drop them in the comments. We're going to start off by talking about what we discussed last time, which is which sectors do we hide in this turmoil, right, that the market has become. So the first sector is all obviously the likes of your ONGCs and Chennai Petro, which are your refiners, right? So if you look at the entire life cycle of crude oil, right? Whatever's upstream, meaning extraction and base refining, there you might find that margins might expand. So, of course, extraction minings will expand because we don't have crude coming in out of the Hormuz Strait. At the same time, the base refiners like your Reliance, like your Chennai Petro, these companies will again benefit because as much crude as, let's say, your ONGC can take out, you still need these companies to transform that crude into its useful form. So these two parts of the upstream cycle might benefit, though I would still not be buying into a Chennai Petro, not even ONGC, because it seems to have been priced in. Someone had an idea early Jan, most likely, but they seem to be priced in. A stock that I might go in, which is an ancillary of the same theme, is Coal India. The idea being that for two reasons, the demand of coal doesn't seem to be going anywhere. First reason is, of course, the crude oil blockage. What that does is it increases demand for coal, naturally, because we need something to generate power, right? The second half of that is for your data centers and the long-term game, right? Even if the Israel-Iran war stops, it ends, crude starts flowing. We simply do not have enough thermal energy generation to match the need of data centers. For example, Elon Musk is using coal-powered plants to power his data center right now, even though that violates environmental norms. And that isn't going to change anytime soon, because the only way to meet this energy demand from AI data centers, which is about 1 gigawatt for a large data center, 1 gigawatt is basically like cities worth of energy generation, right? The only way to meet that demand is nuclear energy. And to generate nuclear power takes 10 years, right? The build up and then all the safety precautions, the testing, the waste disposal, all of that takes 10 years to build. So I'd invest in nuclear energy, looking at a 5-10 year horizon. Maybe the time for nuclear energy will come like 2-3 years down the line. Right now might be time for the infrastructure builders of nuclear energy, which we'll talk about. But for pure power generation, which is immediate need, Coal India seems to be a very good bet because coal prices are going to soar. And even by channel checks, I can tell you that coal prices are very high. They've gone up some 40% in the last few days. So I'd go for your Coal Indias of the world. But I suppose the bigger question that we need to ask is, where does this where does this Iran-Israel issue really end? At what point do we go, yeah, we are seeing a bottoming of the market? How do we identify that? So the first sign is going to be crude oil, right? So this is a historical chart of crude oil. And if you notice, the line in black is your American-based crude oil. And then you have the European crude oil in blue. They obviously follow a very similar trajectory. But this spike does not seem to be ending anytime soon. This spike also came in before the GFC. So for all we know, there's something like that happening. But what's more likely is something that happened around here, right? Which is a systemic risk. This is when your Gulf War had begun. So then crude had spiked a lot. And I feel like that's what we're looking at, a kind of embargo, which means crude oil rises quite a lot. And as it keeps rising, the Indian markets suffer. It's at least a 1 month phenomenon. Markets might price it in a month is what I'm trying to say. Monday, in all likelihood, unless something changes dramatically, we're going to see a crash of sorts. So Tufel, I think we're looking at a significant downside on Monday. Situation's gotten much worse. So if you look at the crude oil smaller time frame chart, and I'm using this just to highlight how Nifty has responded to crude oil, because right now we can't look at gold. We have to look at crude oil to see how things are working. Oh, that's my vibes. Anyway, coming back here. So this is somewhere around where the war kind of began, right? So we saw crude jump in a little bit. This is what, a 10% rise, right? And by the end of the weekend, which would be somewhere here, we'd gone from 66 about to 75 about, 15%, right? Since then, let's say, even if we call it 75, right? So starting somewhere here, which is what, 65, we ended up about 80, let's say. So $15, that's about 20% rise. Over this weekend so far, we've had another 20% rise. So the market, what it priced in that entire week, which was, if I look at Nifty's fall, in that week per se, we're looking at what? Maybe from 25,000 to this, right? It's about a 2.5%. That's all Nifty fell in that entire period. 2.5%, call it 3%, call it 4% at best, right? What we're looking at is about that much of a drop. Now, will GIFT Nifty open that low? I think it might. I think we might see a major gap down opening, 2-3% gap down opening, unless something changes today, right? A big declaration comes in that yes, we're going to soften our stance, both of the countries, which I don't see happening. Because all that's happened is Donald Trump has now bombarded the water desalination plants in Iran, which opens up a front for Iran to attack the Middle East desalination plants. And the Middle East, what I think 70 or 60% of their water comes from these plants. So if they get attacked, now you're looking at the Gulf state basically on the verge of collapse. And I'm not using hyperbole here. It's a literal collapse for the Gulf states. And the bigger issue for the market becomes, and this is very important, most of the American bubble, most of the AI bubble that you call it, has been created on the pillars of petrodollar. The petrodollar that is funneled through the Middle East. So the Middle East only sells its oil in petrodollars. That is then reinvested back in the US because, of course, they don't have any use for that money, right? Like they have a massive surplus. So some goes to sovereign wealth funds, some goes, or most of it goes back to America, trillions of dollars worth. So now, if the Middle East states get into that problem, I think the total amount is 1 trillion. I'm not sure, but it's a massive amount. So that starts getting pulled out, which is how the AI bubble just goes booms. So if all of that is to be priced in, this is a 10% downside, but that might take time. Many things have to happen. We might see a reversal, though I'm very sorry for the bad news, guys, but I really, really doubt it. I feel like at least till March end, we're only going to see a volatile market. But tomorrow is a 2% downside, I think, at the bare minimum, unless something changes. Any other questions also feel free to ask. Now, the obvious question becomes, where do we hide, right? What do we do tomorrow? What are we supposed to buy? What are we supposed to sell? So in terms of shorts, OMCs are still a short. There are all three of them, right? HPCL, IOC, BPCL. I'm already short on all three. But even at these levels, I think they are a fair enough short, very risky. But a long-term short, yeah, because my targets seem very realistic now. At least the 2025 low, 300 about, seems very, very realistic now. IOC and BPCL haven't corrected much, and they're also very good short. The government doesn't have the money to bail them out anymore, the first problem. And these three are not short just because of crude oil, right? Not for just that part of refining margins. It's because LPG makes a big part of these guys' business. And that the gas is basically the bigger issue, right? We've already seen gas cylinders prices go up across the country. I think they came into effect today. $80, I believe, is the increase. And that is to basically destroy demand. It's not that the government needs that money. Good. You have to reduce demand because we're running out of gas. Because gas can't be stored. I'm sure you would have heard this, read this somewhere. So BPCL, IOC, and HPCL, all three have massive exposures to gas, and that's the bigger issue in the short term. Long term, Russia crude, which had basically made these companies become multi-baggers because Russian crude was much cheaper. So these guys' margins had become much higher globally. Now Russian crude is trading at a premium to global crude because that's the only oil that you can actually get, right? Like, what are you going to do if you're a China, you're going to source oil from the US? That's not going to happen, right? So the largest producers in the Middle East can't give oil anymore. Venezuela, the largest deposit, is under the US control. US will not give it to a country like China. What are you going to do? You're going to have to source through Russia. Iran is already out. Iraq is already out. Iran has already attacked Iraq's oil reserves. So the only option for the world that is not directly aligned to the US or is not close to the US is to go for Russian crude. And that's why Russian crude is now at a $5 premium, which means long-term, these companies are not going to give you mega returns. So I think we spoke about this last Sunday, and I said that maybe there's a 5 to 10% downside in all of these stocks. HPCL has fallen by 10%. BPCL, I think, has fallen by 5% about. And I think this is the beginning of a bigger issue. There's some support at 350. I think it will be taken out like a feather. I don't see anything holding. My targets would be around 250. It seems to be very possible now. We seem to have a much smaller audience today for some reason. Okay. Is it the market? The fall in the market getting to everyone? Any other questions, please tell me, because I think this was the base of my discussion. We shouldn't hide here. When the markets are this volatile, this is where you make money. This is not a time for you to, hide under your pillow and not trade. This is the time to make the right trades. You make money both ways here, right? You can make money shorting, you can make money going long when the time for shorts ends. This is the time. But if nobody has a question, then I think I'll end this, right? Janan, just a second. If we look at LNT, so bigger correction, but it's LNT, so it's still a buy, right? No matter what happens. So I'll take you through my thinking here. What I would like to do is see how much LNT corrects by massive falls, right? So GFC, if we reach the worst case scenario, this is the worst case scenario, right? It doesn't get worse than that. We're looking at about 1,000 to 250. That's 1/4. So worst case scenario is about $1,000 for LNT. I doubt that. My first point of support, because if you look at long-term technical reading, right? And I'm not an expert at technical charts, but long-term technical reading says if you make a strong top, right, then that becomes a very strong resistance in that period. But once you've crossed through it, once you've, let's say for the since December 2021, LNT has given us a massive rally, right? So this top before 2021 would be the support where I would go, yeah, that's it. It should not correct more than that. There is a support here as well, 3,200, 3,300, but that isn't something that I'll be very confident about because we're looking at a systemic problem here. The problem is the money is going out of the system. So first support obviously is here, 3,100 about, maybe a trade. But if LNT is going to make a bottom, this is a good place to make a bottom. Some might argue that we also have a support around 3,300, right? This is a very base understanding. But I think I'll look at two charts. I'll look at two targets. One would be 3,100 about, and the second would be, 1,500 about. That's far, and that's going to be tough. So 1,300 to 1,500 will be the lowest that I think LNT will go. 3,100 seems to be where it might stop. Divi's Lab. Let's see. Right. So Divi's Lab as a pharma company would have a smaller exposure to this, but valuation corrections due. I think I remember reading about Divi's. I think it has a valuation problem. Yeah, it's overvalued. So with the trade war and the Gulf War, everything kind of goes against Divi's. This is of course a support 2,800, but I think that's too far. So maybe first support for Divi's would fall at around 54, 5,500. It's basically where we know that there is institutional support, right? When it rebounds from a region again and again. So around 5,400, there seems to be a support. And then I think the base, meaning the real bottom would be around the 2,800 to 3,000 mark, where I would go, you know what, if I don't buy Divi's Lab here, there's no reason for me to be in the stock market. So at half from here, I'd say yeah. But immediate support, given that things don't go horribly wrong from here or or the Hormuz Strait stays closed, 5,400 should be about a bottom. But if the desalination plants are attacked, if the Middle East gets into a massive turmoil, a bigger turmoil than this, real damage, then don't think that 3,000 can't come. It can very easily come, and it'll happen in 2 weeks, 1 week. And finally, you mean Ether Industries or Ether Energy? Because for me, Ether always means Ether Industries. This is my favorite. Like it can go anywhere because this is a very lopsided chart. But it's a stock you accumulate. Like if you get a 20% fall, if it reaches 730 again, that's a buy. It's a screaming buy. If you mean Ether Energy, it's not listed, I think so. That should be fine. Be very careful in this market, guys. The problem here is not that now we'll have traders getting wiped out. So Ether Industries, I think, Janan, 750 is about the range where I would buy. It can go anywhere, right? It can go to 600 for all we know. But it's a buy. At every price point, it's a buy. It's one of those companies that you just buy and leave because you have a combination of everything beautiful in the company. Now, once again, I'll reiterate, the market we're in right now, it's not meant to harm us anymore. Us, I mean traders, right? It's not meant to harm the traders anymore. That was the last 15 months. The market we're in right now is meant to hurt the investors. And by investors, I mean, just a second, Jonathan. And by investors, I mean the SIP, the mutual fund investors. People who have put in money, haven't seen a return in 2 years now, are seeing their portfolios in red and now contemplating, should I just pull my money out? Now that period where we have joblessness coming in, which is because of, we know that the IT services as a whole have lost jobs, or at least in terms of wage increase, it has been below inflation for the first time in years, right? And I'm talking base inflation, not even real inflation. It's been like -3 or -4%. So Mukherjee gave a very good interview on this. Now, we know the joblessness is coming from there. Now, couple that with the market not giving you returns, and the whole wealth effect that we've seen in India just disappears. So that's what I'm trying to get through to you. I've been saying this exact sequence of events will happen from, I think, pardon me. I started somewhere in March, September 2024 when I said that I'll sell when Federal Reserve cuts rates. Right now, I'm holding on. September, I sold all my equity holdings and I said it's going to take some time. Sorry, it's going to take some time, but we are going to see the market collapse when the yield reinversion happens. If you want, I'll show you that as well. But that's where we are now. It's now time for our DIIs to take that hit. The point where they run out of money, that's it. The day redemptions start. And if you don't know, BlackRock is facing redemption pressure. BlackRock is basically all our DIIs multiplied by 6, one company, right? That's BlackRock. It manages, I think, what, $7 trillion or something worth of money. So that they're bigger than all of our DIIs combined, and that too multiplied a few times. So they are facing redemption pressure. They have a private equity fund, and they've been forced to limit withdrawals from that fund. So we're seeing this happen in the US. So don't think it won't happen in India. This is what I'm expecting. Now, I'm not positioning for doomsday, right? As I'm getting good value, I'm also booking out of some stocks just in case this gets delayed a couple of months, though I really don't think it will. But on the flip side, we're looking at one of the best buying opportunities in, I think, a better buying opportunity than COVID coming in very soon. We might not see a V-shaped recovery. We'll still have to be selective after that and all that. But if you make the right bets over the next 3 to 6 months, then we're looking at 10x returns across the board. In the right sectors, 10x returns in 1 year. So there's good and bad coming out of this. You mean Ether Industries, right? So look, the thing about stocks like Ether Industries, which are not very retail focused, right? Like there's not a lot of smaller investors in it. It's that they don't respond the same way that, let's say, PNB would, right? Because those companies have like 20 lakh retail investors. So panic sets in faster. Because when you say retail investors, now you include traders as well. Plus, Ether isn't in futures. So nobody can make money shorting. So large portion of the investors in Ether Industries are going to be your institutions who've just invested for 10, 15 years, who know that the company is going to do well. So they're not touching it. They're not concerned about it going to 100 in the next 1 year. All that matters is that the company's work continues and slowly it'll find its way to easily from this point, barring splits and bonuses, it should be a 10,000 rupee stock in 3 years. Now, you're talking about Rajesh Exports, one of the most controversial companies out there. So the thing about this company, right, where it's going to stop, I do not know. Why it's falling, I have an idea, but honestly, I do not know. Because let me explain what I mean by that. So this company has a market cap of 3,500 crores, as you see, right? Let's look at that. It has a sales of 750,000 crores. So how does this even work? So the idea behind Rajesh Exports, for those who don't know, it's one of the biggest companies in the world. Not India, one of the biggest in the world. I think they process 1/3 of all the gold in the world. No exaggerations. I think you'll find that written here. Processes 35% of gold worldwide, right? Here it is. It's one of the biggest companies in the world. So what I don't understand is why this company defaulted on a 1,000 crore loan. I was talking to someone yesterday afternoon about it, and I told him that I won't sell at these prices. right? It can go anywhere. For all I know, if I look at long-term support, 79.80, there is another one at 25.26 if we get GFC style issues. But is the stock going to disappear? I don't think so. Like, where is this company going to go? Who's going to refine the world's gold? Who's going to process the world's gold, right? This company is going to be here. That means I have to buy into it at these prices. Like, even right now, it's at a, so you might look at this and think the P is expensive, but the idea is that this company is going through some issues that have management basis, right? Like, the management isn't being as transparent as the world wants them to be. Still, this is when you should be buying into companies like this. So you're going into it. And I think someone today questioned my call on Gensol Engineering, right? This stock doesn't have a massive history, but think about it, right? I think its base stands at about 20, right? In historically, this is pre-COVID, right? This is in an era when we did not have the amount of liquidity we do right now. That's when it was trading at 20, 7 years back. And then I can't find the exact thing here, but I assure, there it is, right? It had an 80 crores ka sale. Today it has a 1500 crore sales. Are you telling me it's going to dip back down to 80? Even if it doesn't get mega projects. It's not, right? They found a niche that works. So yeah, there's management issues. Yeah, the stock might get delisted, worst possible case. But as someone who makes a living out of the stock market, it is my job to take these calculated risks. So I'm still, I think Trivishta talked about this. I'm still sticking with this. The idea being, I stand to lose 0.5% of my portfolio, but if the stock does well at these sales, look at the amount of money I stand to make. It's a 60x return. So 60x return is enough for me to take a risk. The same for Rajesh Exports and the same for another company called Delta Corp. I'm not saying buy into it, right? That should be your research. What I'm saying is I like to do this. I like to find companies that are distressed, hold them for 3 years and get a 10x return, 20x return out of it. Because if a company doesn't have massive issues, it's not going to trade below its book value very easily, private companies, right? Gensol is trading at 0.13 times book value. It makes no sense. Yes, the shares are pledged. Yes, 100 different things are happening, but the business is solid, worth a bet. Delta Corp. Once again, we know that the issue with them is not going to stay forever, right? That GST norm is wrong. Obviously, you can't charge GST on bets placed, right? Because the same amount of money is flowing again and again. If we did that as citizens, that would be called fraud. So the Supreme Court, there's a reason why the Supreme Court isn't hearing on it, right? There's a reason it's being postponed instead of there being a hearing. If they were wrong, there would have been a hearing by now and they would have been declared bankrupt. So someday that's going to change, whether it's after BJP goes out of power, whether it's within BJP's power, I don't know, but it's going to happen. And it's my job to buy into a company such as this because I'm looking at, it'll at least touch new highs, right? With our generation, we know we like to splurge, we know we like to spend. Goa's tourism has also hit its bottom. It's only going to rebound from here. As things get expensive, people will have to travel more in India than abroad. Flights are cheaper here, basically. We pay in INR, it's cheaper. People will have to travel. You combine all that, and I'm looking at a 7x, 8x return on a stock. Let's say in 4 years, how is that bad? 0.5% of my portfolio? That's how I take these big alpha bets. Any other questions about anything? So if I just evaluate Nifty, right, where is Nifty going to end up? Tomorrow, I think the 24,300 is gone. Like, that's a given, unless something big changes. Next support stands at, I think, 22,100, so we'll have to touch. Again, something big news comes in, but I don't see that coming in. So I think this would be my major point of support where I'd go, you know what, at this point, I should be cutting my shorts, buying in a little bit. But I'm not even going to share you what my bottom target for Nifty is. You'll call me crazy. So instead of that, I just tell you right now that if I tell you that, you'll call me crazy. So let's just wait and see if we can somehow hold the 22,100. Because going below that, I don't see how we don't hit that. Barring like a bear trap. But again, situation has gone out of control now, right? Like, even if you're Donald Trump, it's no longer in your control. Even if you're Iran, even if you're Netanyahu, and even if all three sit together, the problem is there's no third party. From US, you can bring Mr. Trump. From Iran, you can bring Mr. Netanyahu. Who do you bring from Iran? Peshkin will not work because he's not in charge anymore, right? That's a hydra. that has 15 different heads of state right now, right? Every commander of a regiment, let's say, is now in his own right. So attacks can keep happening from anywhere. And that's I think what Mr. Trump thought of as a masterstroke would probably turn out to be the worst decision he could have made, because now there is a void. Nobody to get the Iranian forces in line. So there's no way that they can sit and just sort this out. Imagine a hardliner. Like, think about people who love a prime minister to death, right? Like, there are some people who are crazy about Mr. Modi. Some have the very right reason. Some might just basically be crazy. But there are people who, if you or if the US ended up harming Mr. Modi in any way, then those people are never going to forgive them, right? No matter what happens, they'll see the world burn. And that's what's happening with Iran. There are these hardliners who are not ready to forgive the Ayatollah's death. So even if someone wants to manipulate the market out, how do you even do that? Iran won't listen, and Iran's attacks will make sure the Gulf states, the Middle East states who have all the money, can't invest in the US anymore, will maybe even have to pull out. If they pull out, Donald Trump doesn't have the money to keep the markets propped up. We know the Indian economy does not have money. We saw that in the budget, if you're talking local. So a combination of all that tells me that, barring a sudden turn, something magical, which I can't even think of an option, barring something magical happening, then 22,100 would be my target. And after that, let's see where the base target of Nifty comes. You must be wondering why I'm being so pessimistic about the market, right? But it's not really pessimism. I want you guys to understand this. I have been talking about this since I looked at this chart. Let me just show you this, right? And this is all the research that I did before I took my call in, again, like March 2024, where I prepared these next 2 years. I didn't know it's going to take this long to happen, but and it was like a 7, 8, 9 month long research. This chart is all you need to know. If you're a mutual fund investor or a passive investor in the stock market, this chart is all you need to see. Whenever you see these inversions happening, stay invested. When this re-inversion happens, right, in the sense that this chart goes above zero, whenever this happens, pull your money out of stocks for just a year. Pull your money out of stocks. You can put it into gold. You can put it into bonds. You can put it into real estate to some extent. But pull your money out. Wait 2 years and reinvest. And I promise you, the returns would be at least 5x over 10 years. Now, I'm not a SEBI registered advisor, so don't just do this, but do your research. Check. Don't just check India, check Japan, check US, check any financial market in the world correlated to this chart, and see what would have happened if you sold every time this line went below zero and came back up, right at this point. So here you'd sell, let's say, December 2000. Just check that. And only go back in once you've seen the markets bottom out, once you've seen the worst of the worst. Here, that period would be somewhere here, right? Maybe March 2006. And you would again pull out at, let's say, May 2007, right? Here, that period would be, what would have happened if you pulled it out September 2019. And once the market went 30-40% down, you bought in, already what happened here. Imagine doing that every time. This is only, 40 years from 1985, right? Include this as well, 1980. If your money went 5x here, that's 5x, 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 6 times. Imagine the amount of wealth that could have been built. And we wonder why Warren Buffett managed to become a near trillionaire, right? So this is how simplistic it can be if you're an outsider to the market. If you are an insider, though, if you are someone who trades, then there's a couple of books that I think you could read. I'll bring them out the next time. One of them is called The World for Sale. It's all about the commodity market, right? And the other one is The Bond Investor. These are 2 books that explain everything about the bigger markets of the world. The equity market is a popular market, but the bond market is significantly bigger than the equity market. And the commodity market basically is the gap, right? Whatever is the gap between those two is basically the commodity market. Again, massive, much bigger for the bigger players, as they say. So try reading those 2 books. They're very in-depth. You could use maybe AI to sort of give you a gist of the book, probably. But those are good books to see how these cycles end up working out. So in case there's no more questions, I'm just going to give you a tiny conclusion of sorts, right? The market is still not a buy on dip. Whether 24,300 breaks, whether 24,000 breaks, whether 23,500 breaks, whichever business channel anchor tells you that this is the time to buy, this is not the time to buy. I agree with the people who are saying even if you miss the bottom 5%, it's fine. Because I think the bottom will be much lower than most people think it will be. I think many people are considering that maybe 23,500 is the bottom, maybe 22,100 is the bottom. I think the bottom is significantly lower than that, unless something changes massively. And if that change happens, then we reorganize. That is our whole job, right? To stay aware of what's happening and to keep reorganizing. And I'll be here if you guys, if that happens, you'll at least see a post and follow that by our live session, which will happen every week at the very least. Now, I do have a request. If you guys think that I've added any value and that I'm a semi-decent person, do try to share my live sessions or my videos, whichever you liked. Do try to share that with some of your friends. It's a lot of research, it's a lot of work. And touch wood, with your help, we've been growing well. But I'd like to reach more people. For selfish reasons, I won't deny that, but also so that fewer people get hurt in situations like this. This is both parts. I'll not deny the selfish reason, who doesn't want to see their business succeed. But yeah, if you think it's worth it. Chinmay, debt funds. So there are some fixed return funds, Chinmay. You can go into that, I suppose. But then it would have to be with companies that are very insulated, right? So if it's a long-term investment, I'd go into it because again, it doesn't matter. If it's just money that you're keeping on the side to keep track of inflation, then debt funds make sense. But if it's my money, I wouldn't put it into any fund. I'd segregate it across multiple banks first. I'm not saying a bank is going to collapse. I'm just a guy who likes to keep as many safety checks as possible. So I'd spread it across at least 2 or 3 big banks, and I'd keep it in my savings for now because I wanted to reinvest. That's for me. Now, debt funds ka problem kya hai? If you can withdraw it in, let's say, 3 months or 2 months, it still makes sense. But then whatever money you make, you're going to end up paying in taxes. Because the market can give you an opportunity in a week. It's very difficult to figure that out. So if you're an equity investor, someone who creates your alpha through equity, then I wouldn't say go into a debt fund or any fund for that matter, barring your extreme long-term investment. Like I also have a couple of extreme long-term investments that I've just put into mutual funds. I get a deduction every year, and that will stay for 20 years, right? 30 years, 40 years, whatever. If I someday I'm in massive need, I'll break it. Otherwise, it'll pass on to my son and then whatever and whatever. Those kind of investments, debt makes sense. It beats inflation, but not for short term. Right now is not the time to buy into any kind of fund. Again, so pessimistic. Like this is, I promise you, I'm not a bear. I am a bull at heart. It's just that the world is bearish right now. The markets are bearish, and it is my job to identify the mood of the market and be in that mood. So there's a lot of money to be made still on both sides, shorts and longs. Shorts are right now. The longs time will come. A month, 2 months, 3 months. We'll have that time where we'll be able to make more money than we did over the last 2 years. Like let's look at a couple of examples, right? Like what stocks would do brilliantly coming back up. My main target would be metals, right? I'm just gonna, so this company, let it collapse. Right now, it might not immediately collapse because metals are becoming more expensive, but I think tomorrow we'll see metals fall as well. Because now the problem isn't just pricing. Now the problem has become systemic. It's dragged on for so long. Crude hits 120, 130, and then these metal refining basically becomes near impossible. Because you need some way to heat up the metal, right? What are you going to use? You're going to use coal, you're going to use crude. Whatever you use, it's going to get more expensive. So then as this collapses, I would want to buy into these first. Because systemic collapses do not beat metal super cycles. We are in a commodity super cycle. There is no denying that. The same that we saw somewhere here, right? In this entire period from 2003 all the way up to 2008 to 9. Not even there. I think all the way here, we stayed in a commodity super cycle. This is where the cycle ended. Now, how do you know it's a commodity super cycle? Whenever the world is going through a rejig, right? A new technology comes in, you need new infrastructure. So the infrastructure of the world has been built for ICE engines and has been built for the internet. Now we're getting infrastructure for electric vehicles and we're getting infrastructure for AI, both of which needs massive reconstruction. And what do you need for reconstruction? You need commodities, right? You need your aluminum, you need your copper, you need your steel, you need your coal, you need your crude. So their super cycle has not ended. This systemic issue might give us a great opportunity to make some swing trades, which would be in metals for me. Copper, for sure. Nalco, because you can't do anything without aluminum, and copper for sure. These would be the two brackets I'd go into. Not right now. Let it get to good prices. I'm not going to talk about entry prices here because, again, they might seem absurd, but those are my entry prices. Right? My entry prices would be in this region, right? 380 about, maybe even 310, 320. If it doesn't come there, I don't buy and I miss that opportunity. Fair enough. But that's a point where I'd go, yeah, maybe it's worth an attempt. Rohit, so had you said it's an HDFC bank, I suppose I would have said yes. But look, I love Mr. Kamath, right? He has achieved more in his life than I have, for sure. And I think he's a very intelligent, wonderful person from all that I've managed to see. But the problem with discount brokers as a whole is that we don't know what's happening behind the scenes. We genuinely do not understand if they are leveraging money beyond norms. I don't think Zerodha is going to do that. Pardon me. I don't think Zerodha is going to do that. That's not what the company seems like. But we don't know what's happening. So why would I risk my money? I know that if I've got it in an HDFC or an ICICI, it's insured. The Indian government has never let a single rupee from a savings account ever be lost to a systemic problem. I don't think that will happen again. So if you're asking me, I wouldn't put it into it. But I can't tell you that you can't put it in, right? My advice would be to not. Then see if you trust it enough. Yeah, it's a risk. It's a risk still. What else? Where else could you park money for now, right? Are you looking for immediate returns, or are you looking for a 5% return, let's say an 8% annually over the next 3 months that way, or are you looking at just keeping this? There's no point in even keeping this like that, right? Like the liquid case. So no, I wouldn't. In very simple terms, I wouldn't. And I'm sorry again, dude, like all of you, because this is, I know, massively pessimistic. But what can we do? That is where the world is, Abhi. We had a period of extreme optimism, 2020 end to 2021 end, and then even 23, 24. Now we're looking at extreme pessimism. So you remember those times when you could buy a share in the morning and sell it at a 5% up in the afternoon or evening? That happens in bear markets as well, except downside. You could literally short any share and it'll be down 3% by the end of the day, 5% by the end of the day. You have to realize, right? Just realize one thing. I think this is a perspective that many people don't have. But even if I look at an LNT, right? When it started falling here in November 2007 from 972 to 276, when you look at this, you go and say it's a 75% fall, right? But a 75% fall does not mean 7 lower circuits of 10%. You understand that? If LNT was trading at, let's say we call it 1,000, right? If it was trading at 1,000, a 10% lower circuit takes it to 900. But the next 10% circuit only takes it to 810. The next lower circuit is only $81 now. It only takes you to what, 719 or something, right? You realize what I mean. As the stock price moves lower, you need a higher percentage fall for it to fall to this level. So this entire thing has, I don't know how many 5% falls in LNT. Like it kept happening for months at a time. We haven't seen that, right? We have not seen that since 2009. That's 17, 18 years. Nobody's seen that. But that happens. And this is only because we're seeing LNT in India. If we look at the Dow Jones ka chart and we pick up companies that have existed since the 1930s, 40s, you'll see that has happened to them 4 or 5 times in history. So never for one second think that stocks can't keep falling for 6 months. I know some people say that. Some people that I'm a fan of have said that recently, which was disappointing to me. But it happens. Is it going to happen here? We don't know that for sure. But signs are something like that can happen, which is why just stay protected. Don't have to short. Just stay protected. Don't have to use options, right? I'm someone who is a little wary of options because of the theta. But it doesn't hurt to protect capital, because when the bull market starts, you'll know well before the market makes a top. When the bull market starts, you get a 300% return on average. So even if it starts at, let's say, 25,000, for example, right? We're at 25,000. Let's say 24,000. 25 is easier math. So let's say 25,000 it starts, you miss the first 1,000 points. But the market is going to go to 60,000, right? 50,000. At the very least, you're going to get 50,000. So how much did you really miss, right? You missed 5% of your gains, but you avoided a 50% downside. That's what I'm trying to get through to you guys. In these kind of markets, missing the bottom 5% does not make a difference. The first 5% rebound does not make a difference. The difference is not falling for the final bull trap, because that is where everyone gets stuck. When news like India and US have signed a deal comes out, and everyone thinks, oh, that's it. Now Nifty's made a new high. Now we're going to become rich. Now it's going to be a bull market. That's where the final bear trap comes in. Bull trap comes in. So just stay protected. That's all I'm asking. So Chinmay, about SIPs, I never recommend breaking them. I assume I've spoken to you before, I think, and I know that you're a wise person, so you know that when you're going into SIPs, you're not going for 5 years, right? You are someone who would have gone into it for 15, 20 years. So SIPs should never be broken. Barring exceptional circumstances, let the market crash, whatever happens. The reason for an SIP is to take advantage of bottoms of all kinds of market situations. So I would never say sell an SIP. Holding cash is brilliant. If you can, if I was, let's say, for example, I sold a property about 3 months back because I wanted to hold cash, and all that money is in cash. It's not short, it's not long, it's just kept in a safe space. So all I want to do is just wait, let the market bottom, and then we'll see where to go from there. Keeping cash doesn't hurt. So stocks like Vatik, Vabag have to do well long term, barring of course some management issues. But yeah, Vatik, Vabag should work. India Mart I don't follow, so I won't give you any advice on their business because that's a much bigger market. I can't analyze that in 5 minutes. Right, India Mart ka business would need me to look at so many things, including how government's OMDC and everything might impact it, how the exports align with it, how the Make in India aligns with it. There's many variables there. But Vatik Babag is a great company. I have no doubt about it. It has to do well. In terms of P, I'm just going to make a quick check of its historical P. Still expensive, to be honest. I haven't bought it. I won't buy it this price, but maybe start buying at, if we can find a support that works twice. Maybe start buying at 9,000 about, even here at 1,000 to 1,100. Maybe the first tranche could go in. Yeah, about there. But yeah, long term, it's a good company. There's another one in this water management sector. That's EMS. This is also a very nice company. Does fairly well. This looks decently placed. It's cheaper as well. Doesn't have as much business. Water Babag is bigger. And then you have Ion Exchange. This is technologically probably the best placed. I think if I'm going into water management, I'll split it across these three. Ion Exchange would probably be my favorite though, simply because they have a technological advantage as far as I'm aware, because this is a company, they're aligned with a company from, I forget which country, UK, I think they're aligned with that company. Just double check that. But they have a technological advantage, which is why in the bull run as well, you notice that Ion Exchange gave you a much greater return, no? 700 from the bottom of 72, so that's about a 10x return, right? I don't think Vatic gave you 10x returns, did it? Oof, 20x. So maybe Vatic is better. But I do like Ion Exchange more. I remember Vatic Vabag came to my radar first when I saw Mr. Rakesh Jhunjhunwala invested in it. I don't know if they're still in it. Yeah, she's still in this company. I remember I saw and I thought, why would they be invested in this company? Now it makes sense. So Vatic maybe, but slightly lower, I guess. Again, the market's falling right now. Like it's like a free fall market. So to find a bottom here is fool's game. I wouldn't. Phased investment at wherever you think you should invest. My thinking would be this: wherever I think I should go into a stock, I'm going to wait for a 5% fall before that. So let's say if I want to buy into a stock at 1,000, I'm going to actually buy it at 950, because on the bull side and the bear side, the market's always surprise. So bull market में markets always gives you an upside surprise. Bear market में हमेशा downside surprise मिलती है. Axtel. Should I know this company? Never analyzed it. It's a micro cap more or less. Sorry, 22. What? What do they do? Food processing plants and machinery. So, what's your thesis on this, my friend? Like, what is the reason behind Axtel, Ravindranath? Like, what is about this company that makes you go, yeah, I want to keep this company in my portfolio? Weirdly, since the war, it's been doing better. Is there something that we don't know? Promoters haven't sold. We don't know the FIIs. So I can't give you an opinion on this. I really can't, Robin. I don't know enough about the company, and the business seems very obscure. Like, okay, they make food processing machines for all sorts of industries, but why should that company be worth 1,000 crores? Like, what makes this company this big? Wenger, that's not a direct part of the business. Only one manufacturing plant. That's a massive risk. Who do you make it for? Amul, Britannia, Everest, Haldi. Okay, that kind of explains why this happens, no? So I think the only caveat, like the company seems nice. I don't know if it's worth investing yet. It's too soon, but the business seems okay. Like they've got big clients, but the only caveat for me would be, there are some companies like Tata Elxsi and all that are coming up with these systems where they simulate your plant in an AI environment. What I mean by that is, if you use AI to work through your plant, and by AI I simply mean automating a lot of parts of the plant wherever human error is a big problem, where you don't need humans, and then they basically see if you make some changes. Could be AI based changes, could be non AI based changes, right? You use one machine instead of the other, just that. But you're simulating all this, so it doesn't have a massive capital expenditure, which allows company to just do this, and you can bet on it that Britannia, Nestle, and these giants are doing that through whichever IT giant they go with. But they're doing that. If that changes the kind of machinery they use, I just check on it. I'm not saying it will. I'm just saying that this is what I would want to check to make sure that the company doesn't um, go out of business. And I think the biggest red flag for me, if I'm to find one, because the business looks good, but the biggest red flag for me would be that it has only one manufacturing facility. Now, what happens if a fire breaks there? It can happen anytime, right? So I wouldn't invest in this company for that sole reason. Like, even if it's a great business, if it's one manufacturing plant, it's too big a risk. It should be, right? So Ravindranath, just being like, cash flow positive होना isn't everything. It's good, right? Like बहुत अच्छी बात है that आपने वो check किया, but it's not everything. Like, is there growth in the business is very important, no? And is there a clear challenge to the business? So my mindset is very clear, Chinmay. I am seeing shorting. I've built my short positions. I'm letting them play out. The world will tell me where the bottom is. I'm not, sorry, I'm not hell bent on holding till it goes to 18,000 or 22,000 or 23,000. Nothing like that. All I'm thinking about is, I've got shorts. They seem to be working for now. All I'm thinking about is, whenever the bottom comes in, I want to have the right stocks to buy into, both in futures and delivery. I don't care if Iran war continues for 2 more weeks, 2 more months, 6 more months, right? Like, obviously, it's incredibly horrible that there's a war, right? Duh, right? People are dying and there's bombs being put on innocent people. So that part's there. But as a market participant, unemotional is how we have to be. Like, you cannot have an attachment to your trade or fear of your trade. You can't have that. Just got to be like a robot going in thinking, these are my triggers, this is what is happening, let me process all this information, see where this takes me. And until you're 1,000% convinced, you don't go into a trade in these kind of markets. The reason I say 1,000% is, no matter what happens, your patience will be tested, your belief will be tested. Whether you short, whether you go long, the market will test you. The greatest rallies in the market have always come in a bear market. Only when the market is falling do you get these massive short covering rallies. So if you're shorting and the next day you get a short covering rally, you have to know that I'm holding this for a certain price for a certain time frame. That's nice, yeah, Janan. If you manage to leverage this, then that shows an acute understanding of how geopolitics affects the stock market. That's rare. Not many people can work or create the association between geopolitical events and the stock market that easily. I don't know if you've read a book, but there's a book called, I talked about it earlier, The World for Sale. That will help you sort of refine that. How can we come to know bottom? So technicals don't matter, Chinmay. Like not in this kind of market. Technical matters in a stable market, right? So तब आप बोल सकते हो 200 exponential moving average हो गया या monthly moving averages इस market में तो वैसे matter करते हैं. So maybe monthly averages could work, but right now when you look, for example, if you remember the late 2020 and mid up till mid 2021 ka market, no resistance has worked, right? There was no, it's gone this much percent over this, or it has, the Fibonacci sequence has been beaten by this much, or it's become a Six Sigma or whatnot. Nothing mattered. The stocks just went up. The technicals didn't matter. The same way the technicals won't matter here. The bottom will come based on a news. The bottom will come based on a reaction at some point. And now, if you're asking exactly how do we spot that, I forgot I had come up with this. It's in my notebook. It's kept there. I'd actually found something that I thought I'll research more. I'll look it up. I'll either make a video on it or I'll put it up in the next live. But there was an indication that always tells you that bottom is coming. I think it was silver and gold, right? Gold to silver ratio. Tha. Like when you see that turn, right? I think that is where the bottoms are made. But I have to do a little more research on it. For now, my mindset is, because I'm no longer playing the 6-month game. Now I'm playing a game where if I get enough profits out of a short and I'm coming out of that short, even if I miss another 10% downside, because I want to keep liquid cash now. We don't know which stock will suddenly fall 20% and the next day it's going to be 10% up. So it's a brilliant trading market. I want to keep more liquidity in that. But technicals, no, are a strict no. Just monthly moving averages might work. But your daily and weekly moving averages have long been surpassed. Anything else, guys? Wait, we talked about the gold to silver ratio. Now I'll just see if that works. Till then, if you guys have any question, we can discuss it. This won't show me all time, will it? It will. Awesome. So let's see where the bottom's made here. See, peaks here, falls. No, nope. At least in this one, it didn't work. I probably can say that this is the end, but it's not a great sign. We'll end up missing out in years worth of thing there. Turns much later. This won't work. I think for now it would be crude then. If crude gives you a major change, right, at really high volumes, then that might work. But I'm also keeping an eye on Bitcoin. I don't think we'll get a bottom till Bitcoin reaches about 35. At least till here, 45, sorry. At least till here, 1/3. Because it always gives you 1/3 correction. So I'm expecting another 25% fall in Bitcoin. I don't think we're going to see the end of that before this. So Bitcoin, I think there's another 30% fall, 25% fall from here. I think. Though I bought in maybe 5 lakhs higher than this. It was at 65 lakhs about when I bought in, I think. That was my first target, but now I've got another one, 45 to 50 each. I'd like to buy in if it comes there. I hope it does. It might be a good opportunity, but a very small allocation, right? We're not going in with 10% allocation. For me, my Bitcoin allocation right now, total, and that's all cryptocurrencies, is 1%. All cryptocurrencies. That includes Bitcoin, Chainlink, TON, a bunch of others. Ethereum, Solana, 5 of those, yeah. All right. So thank you, everyone, for joining me. It's a pleasure as always. Keep your money safe. That's what this market is. There's a quote I'll leave you with, right? There's a time to go long in the market. There's a time to go short in the market. And there's a time to go fishing. Go fishing. I'll see you next time.